All right, before we start, guys, let me just talk a bit. Let me just address Solomon's question. Yeah, okay? The asset purchase target, or the asset purchase facility, as I call it. Basically, that's the amount of money that the BOE is printing, that they're using to buy bonds from the commercial market. So it is a form of quantitative easing. What the BOE is saying that is, before we have a budget of 200 billion to buy up bonds from the banking system, if it needs to, if they need cash. But now we're increasing it. We think that we need to raise it to 275 because the economy is just not growing the way that they were expecting it. So this means that they're going to print money. This newly printed money will be used to buy up an additional 75 billion pounds worth of bonds that the banks may issue. Excuse me. But anyway, let's get to our main theme, our main topic. So guys, welcome to this coverage of today's interest rate decision by the ECB. Okay. Before we discuss the charts or any specifics of the charts, let's just review some things. What are these things that we need to consider, we need to review? First question, what is the primary objective of the ECB? Well, something that we have to remember is that the ECB's main role, the ECB's main job is to maintain price stability. Hi, Ray. This means that unlike the Bank of England or unlike the Federal Reserve, in general or in theory, problems in the economy should not be a concern of the ECB. If the Eurozone goes into a recession, it is not the task of the ECB to fix things. Okay? Gold, Fed style QE, yeah, so we would also expect, okay, let me explain that later. Can you remind me after we do this, we go to the slides. So as far as the ECB is concerned, its main job is to maintain price stability within the Eurozone. It is not its job to make sure that the economy is doing okay. As long as prices, as long as inflation in the Eurozone remains below 2% as measured by the harmonized index of consumer prices, then it is doing its job. Okay, the people at the ECB gets to have their bonuses. So where is inflation in the ECB right now, and what is expected out of that inflation? The last inflation data for August turned out at 2.5%. The consensus forecast for inflation is at 2.5% for September, but our flash CPI data actually indicated that your inflation for September may be at 3%. So data is suggesting that the inflation in the Eurozone is continuing to push up. This is strange because in the last testimony that the ECB President Jean-Claude Trichet had before the Eurozone Parliament, and this testimony actually happened 2 days ago, last Tuesday. Trichet said that the outlook for inflation now is broadly balanced. Okay, so the medium-term outlook on inflation is broadly balanced, meaning that he doesn't expect that inflation in the next 6 months will be a lot higher than where it is right now. He's saying that before we were afraid that inflation will really spike up. That was why we had a bias for tightening. But now we think that inflation will not be spiking up anymore. Of course, as we said, we just saw your flash CPI data, and against a 2.5% consensus forecast, it jumped to 3.0%. The consensus forecast of market and the flash data is 0.5%, has an 0.5% gap. So maybe the need to do something with their math, with their forecast models. Now, what has been going on? Now, here's where the problem in the Eurozone kicks in. As we said, in the U.S., the Fed is responsible for making sure that inflation that the U.S. doesn't have a runaway inflation. But at the same time, the Fed also has a mandate to ensure that people have jobs, that the economy is growing in a sustainable fashion. Okay, in the Eurozone, this is not a task for the ECB, making sure that people have jobs, making sure that the economy is sustainable. Well, that is just a sign of how uncertain the times are right now, Gold. So what is happening in the Eurozone now? Over the weekend, we heard from Greece. They said that we're sorry. We know that we have this commitment. There's this program that you have for us to fix our economy, but we just cannot meet the deficit targets for 2011. The problem here is this. You put up a deficit target, but you're also asking the Greeks the Greek government to curtail its expenditure, to balance its budget. In a situation where there's a recession, when the private sector is not spending money, it's not investing, and you're forcing the government to also adopt austerity measures, there is no way that you can cut your expenses to such a degree that the deficit between budget and expenses can be met. The economy is getting smaller. Expenses are still there. Expenses are dropping at a smaller rate. The only solution has always been you expand the economy, you make the economy grow so that the government earns a lot more taxes, and with this greater tax collection meets its expenses. So that's one of the problems. And you know the solution to a recession. If an economy is in a recession, then you cut interest rates. Make it a lot more cheaper to put up a business. More developments. Jean-Claude Juncker, the head of the EU group, cancelled a meeting that was set for October 13. What was the purpose of this meeting? Supposedly, in this October 13 meeting, the finance ministers of the Eurozone will discuss whether they will release an 8 billion tranche of payments, an 8 billion tranche of aid to Greece. They've cancelled it. And they're saying that the earliest time that they can reschedule this meeting will be in November. Guess what? By the middle of November, if Greece does not have this 8 billion aid payment, this 8 billion euro aid, the civil servants, your teachers, your people who are working in government, they're not going to get paid. Okay, they're not going to get their salary if this latest tranche of money is not forthcoming. So there seems to be a game of brinkmanship going on between the Eurozone officials. They're still not getting their acts together. What else? When you go to the banking system, a couple of weeks back, we heard how Asian banks were no longer willing to do forex swap transactions with some European banks. Okay, because of the exposure of the European banks to Greek debt, and because of the risk of a default by Greece on its debt, some Asian banks, especially the Chinese banks, are saying we will not do forex swap transactions with you guys. How sure are we that when we give you gold, I'm assuming you're German, so probably that's part of your tax money in that 8 billion euro. You're seeing this, the European banking system in crisis. Banks elsewhere in the world are not keen about doing business with the European banks anymore. They're especially not interested in doing forex swaps. What's a forex swap? This is when a bank can go to another bank or another counterparty and they tell them, we have $2 billion, we need this much euros. Can we swap our dollars for euros? We will give you our $2 billion, you keep it for a year, and after a year, you give us back our $2 billion. Within that year, we will also use your 1 billion euro for whatever we want to do with it, and then we will return your euros back to you in a year. So Asian banks in particular are no longer interested in doing this kind of transactions with European banks. They're afraid that maybe some of these banks won't be around. These banks may not have enough capital to actually return to reverse the transaction, to reverse the swap transaction when the time comes for them to swap their monies back. Other developments, we've heard about how Dexia is heavily exposed to Greece, how because of this exposure they need to recapitalize. Guess what? It's not just Dexia that has this problem. A lot of the European banks are exposed to the Greece issue. A lot of them are vulnerable should Greece default. And you know what's the problem here? What the problem here is? Whose fault this is? It's actually the fault of regulators. Back in 2008, when we had the mortgage crisis, regulators said, you know what? Maybe it's wrong for you to buy a lot of these mortgage securities. These are unsafe. Yes, you're getting high rates of return. You're getting 8%, 10%, 15% returns. But look what happened. We now have this 2008 credit crisis. So rebalance your books. Instead of buying those risky commercial debt, buy government debt. Load up on government debt. So whose fault is it that the European banks are heavily exposed to Greece? Essentially, the politicians, the regulators. They've been telling the European banking system. They've been telling the European banking system to focus on government bonds, which is now at risk of defaulting. Wrong. Lloyds has also pulled out of some Euro banks. Okay, so that really underscores how fragile the situation is in Europe, and that also explains why we got this surprise increase in the asset purchase facility by the Bank of England. Okay, they're telling their banks, if you need money, tell us, we will provide you the money. Now, what's the situation in the ECB at this point? Let's put it this way. This is the last ECB Governing Council meeting where Jean-Claude Trichet will be the president. Okay, October 31 he's stepping down. He will be replaced by Mario Draghi. Who's Mario Draghi? Head of the Bank of Italy. He is said to be more German than a German. So what does it mean for someone to be more German than a German? Basically, he does not believe in pumping money. He believes more on austerity. Okay, so his approach to economics is non-Keynesian. I forgot what the other school of economics is, but he doesn't believe in government in the ECB taking an extreme role. Now, lately, or during the last ECOFIN meeting, we had Treasury Secretary Geithner invited. He joined it. What was the proposal of Treasury Secretary Geithner? He said that why doesn't Europe tap that 440 billion euro EFSF fund, okay, your European Financial Stability Fund? Why don't you tap that 440 billion fund and leverage it? Why don't you get the ECB to lend you trillions of euros, and you can use your 440 billion euro as collateral with the ECB? So this is what's been going on. Geithner is also saying one solution to the Eurozone debt problem: have the ECB guarantee sovereign bonds. Meaning, if there's any country that will default, have the ECB print the money needed to pay for the defaulting bond. Of course, the problem here is this: if you have the ECB guaranteeing debt, then you create moral hazard that governments will not balance their budget. Okay? You create a situation where the government will be more relaxed in adopting austerity measures. This has happened in Italy. Remember a couple of weeks back, we had reports that Italy was under attack, that that the commercial buyers were no longer available for Italian bonds. What happened? The ECB went in. The ECB bought Italian bonds, and what did the Italian government do? After the ECB started buying Italian bonds, the Italian government went back on proposals for austerity. They loosened up their proposed austerity measures once the ECB stepped in. So the ECB does not really want to be in a position where it is liable for all these things, but it cannot compel the governments to do these changes. All right. Now let's talk about what has the ECB been doing. This year we saw the ECB raising interest rates twice, April, July. Since December 2010, your inflation rate in the Eurozone has been above 2%. What is 2% again? 2% is the inflation limit for the Eurozone. Year-on-year HICP should be below 2%. If it's above 2%, by the rules, by the textbook, the ECB should actually raise interest rates to prevent inflation from pushing up any further. Of course, the ECB has tried to prevent inflation from pushing up. They raised rates in April, they raised rates in July. What's the latest HICP? The forecast or the preliminary figure for September is 3%, when the market was looking for 2.5. So the situation is actually worsening. But what did Trichet said? The medium-term outlook is now balanced. We're not expecting inflation to spike up anymore. What else are we hearing? What else has the ECB been doing? They've been intervening directly in the sovereign bond market. When Italy got in trouble, they started buying up Italian bonds. The ECB has also had this unlimited LTRO, or their long-term refinancing operation. What does that mean? Basically, if you're a bank in the Eurozone and you needed money, you could have gone to the ECB and you could say, can we borrow this much money and we will give it back to you in a year. whatever the amount is that's needed by a European bank, the ECB is supposedly there, ready to provide the funding necessary. But despite all of these measures that the ECB has been doing, that the ECB has undertaken, what have we seen? Okay, we have seen very little resolution of the problems in the Eurozone. Okay, we continue to hear about default situation. We continue to hear about the structural problems that's hounding the euro area. We continue to see data which suggests that even Germany is slowing down. So, what are we supposed to watch out for? Well, for now, the expectations is that the ECB will keep rates steady despite everything. You have to look at this from their perspective. Their job is to control inflation. Okay? Their job is to make sure that inflation does not stay above 2% for too long. And it just kicked up to 3%. Yes, the solution to a recession, which the periphery is suffering right now, is you lower interest rates. If you lower interest rates, you make it easier for businesses to come up with capital. You make it more likely for businesses to put up something new, expand production, or maybe come up with a new product. But on the other hand, inflation is going up. So how do you resolve this? You stay in the middle, don't do anything, and pray that somehow the situation will resolve itself. So that is what the market is expecting out of the ECB, that we don't get any rate action. Of course, we have some extreme elements. JP Morgan is calling for a 50 BPS rate cut. What does that mean for us? If you get a 50 BPS rate cut, which will be a surprise for the market, if JP Morgan is correct, then to me, that's a big excuse for you to think about getting a weaker euro. That's a big excuse for us to think about dumping the euro. Excuse me. Well, we will look into the charts in a bit. Other things to consider. We want, during the press conference, let us see if Trichet will reiterate the broadly balanced medium-term inflation outlook. Remember that Trichet mentioned this last Tuesday, despite that spike in your preliminary, in your flash CPI data. A reiteration of the broadly balanced medium-term outlook is a suggestion that although they are not cutting interest rates now, reiteration of this statement would probably mean that, you know what, we're not cutting rates now, but maybe at the end of the year, we will be cutting interest rates. Okay? So, that would be a bearish suggestion. Something to watch out for as well will be, what would he say, or how would he clarify about his opposition on the leveraging issue of the EFSF? Trichet has gone out and said that the ECB does not want to be responsible for this. The ECB does not want to provide those trillions of euros, print trillions of euros, and then leverage the EFSF. The idea is the EFSF will be placed in the ECB as collateral, and then the ECB will leverage this, will print money more than 440 billion, okay, and provide this funding to help out the periphery. Remember, guys, that 440 billion is not enough to fix the problems in the Eurozone. Greece alone needs 103 billion euro. And the Greek economy is a lot smaller than Spain. And what are the next targets of the market? They're targeting Spain, they're targeting Italy. These are trillion-dollar economies, and 440 billion euros is not enough to fix that kind of problem. So, we want to hear clarifications from Trichet on this. If Trichet is adamant about no expansion of or no leveraging of the EFSF through the ECB, your next question is, who else has the money to give? Who else has 1 trillion euros? No one. Okay. The ECB doesn't actually have 1 trillion euros, but it can print 1 trillion euros. It has the authority to do so. So, if it's not the ECB, then it is impossible to leverage the EFSF. Well, Draghi cannot dictate. He can be persuasive. There's always the prestige of being the president, but he cannot dictate to the governing council. Besides, Draghi, as we said, he's more German than a German. So he's likely to follow a more stringent approach. He's likely to be the opposite of Ben Bernanke when it comes to monetary policy. Rob, the Chinese have already said that they cannot rescue everyone. Besides, it's the Chinese banks that are the first to pull out of forex swap transactions with the European banks. So maybe they're helping some individual countries, but they're not going to give you that trillion euros. All right, now let's take a look at our charts and see what can we do. Let's start with our euro then. Among the commentaries that I've read out there, among the stuff that I've read out there, proposes this. This is the more difficult to understand proposition that I've heard so far. We have already seen a sell-off in our euro for the last 3 weeks. Any failure or any rate cut that happens can be a buy on dips. Any rate cut that happens in the eurozone will be a buy the rumor, sell the fact idea. Meaning the rumor is that you're going to get a rate cut, so before the rate cut actually happens, people were already selling. They're buying the idea, and once we get a rate cut, we're going to get the euro to bounce. That's one of the ideas that I've encountered out there. So that's one of the ideas that's floating out there. Buy the rumor, sell the fact. Rumor is we're going to get a surprise rate cut. So, but because market has been dropping, people are saying there are some analysts out there that are saying we've already done buy the rumor. So look for the sell the fact. Look for a rally instead if there's a rate hike. Let me put it from my perspective. If I look at this chart, what am I getting? Yes, the high from 3 weeks ago is at 37.97. The low for this week is at 33.16. You've had a sell-off from that perspective. You've dropped. But if you look at your price action, what have you been getting? Instead of a nice big bear market, you've had downswing, bounce, downswing, bounce. If you look at your daily charts, you're going to note that over the last 3 weeks, what we've done is congest, congest, congest. We have been shifting our congestion from different levels. So from this range play to this range play to this range play, and now this range play. So what does that mean for me? how can you get buy the rumor, sell the fact? If we have been congesting, that means that people have been going in and out, in and out, in and out of this market. So where can I get position squaring? Where can I get sell the fact part? Where can I get the spike if people have been congesting? So that proposal about buy the rumor, sell the fact, I'm ignoring it. I think if we do get a rate cut from the ECB, because the official consensus forecast is for steady rates, then if the consensus forecast is steady rates, I will look for people to react according to textbook if there's a rate cut, and I would look for knee-jerk response, a sell-off. I would look for a test of our key support at 3146. An ideal target for me will be a run for your psychological support at the 1.3 area. Maybe even ease off all the way down to my next key support level. The next key support in our Euro chart is this, your 28.75 price point. Okay, so I'm not expecting to get to 28.75 immediately, but a surprise rate cut will have me thinking, can I get to that 28.75 price point in 2 or 3 days, or maybe by early next week? What if we get a rate hike? A rate hike, whatever prices are, will have me buying, because I think that the rate hike is the most extreme scenario right now. I know that it's not the job of the ECB. Oh, thanks, Money Magnet. As expected, then no interest rate announced, no change in our interest rate from the ECB. Well, Sean, technically we have a bearish market. Technically we're getting a breakout, so I would look for a test of our lows for the week in our euro. Let me change my profile view. Euro Magnet, yes, this as expected decision is bearish for me. We may not have gotten a rate hike, but if you look at this from a technical, we may not have gotten a rate cut, but if you look at this from a technical perspective, we found ourselves coming from strong resistances at your 33.82 price point. Okay, we're getting a rejection from strong resistances. I'm not going to sell this immediately. Okay, pricing is important. Ideal entry points are, at the very least, you come from your 33.35 region. Next, you give me a close on an hourly basis below this support at 32.79. Other things to consider. Average daily range for euro is 150 pips. How much of that 150 pips average daily range do we have in euro right now? Well, let's put it this way. Days highs are at 33.98. The low is at 32.73. So we've seen 125 pips. At this point, I seriously need a close below 32.79 before I can become bearish. You already have you're close to getting your average daily ranges. So I need a nice technical breakout if I am to join this. Otherwise, the only place to short will be at least coming from your 33.35 price point. Can you jump in now? The problem with jumping immediately is that your downside may be limited to another 25 pips below the lows. So the lows for the day is at 32.68 now. Add in another 25 pips. That's 32.68 the most that we should be looking for will be a push towards the 3243 area. So if you jump in now, you're talking about maybe getting another 30 pip, 40 pip reward. Doesn't really look attractive. If you look at your next support, you have 3228. So if you're thinking maybe we can exceed our average ranges a bit, but since our next support is 3228, then exceeding our average ranges could maybe get us only down to that 3228 region. So technically, we are close to running the course of our sell-off. The most that we can get now for any further sell-off would be about 40 pips at most. Not a very attractive notion when you consider that you've seen a big sell-off already. When you consider that the ideal stop losses should be at least your 3367 area. I guess you can always place a stop loss above 3279, but that requires that markets close below 3279 first before putting your stop above it. Shans, I would look for a bounce only if we somehow test the 3228 price point. Remember that the overall bias in euro has been for the sell side. Okay, we bounced off, but our bounce was rejected from strong resistances. So I don't think that a big bounce can happen today. I don't think that we will see ourselves pushing back above 33.35. Technical rebound, maybe a brief spike to that 3335 area, possible. But to turn around and hold back above 3335, I don't see where we can get a catalyst for such a move. The next step now really focuses on our press conference. We know that they've opted to keep things steady. The question now is, what is in the details? Okay, what is the reasoning behind the decision to keep rates steady? And we know the question to ask. If they say that we get broad-based inflation risk, that means that they are turning a blind eye on the spike in CPI, and that means that they are preparing the market for a rate cut maybe next month or in December. Okay? If somehow that broad-based risk to inflation suddenly disappears. Remember, in the last meeting, in the previous meetings, they were actually saying that the risk to inflation was still on the upside. Okay, medium-term outlook for inflation, medium-term inflation outlook was for inflation to pick up. So if they suddenly go back to that kind of stance, that means they will keep interest rates steady. No matter what happens, they will keep interest rates steady throughout the course of the year. But a reiteration of what Trichet said last Tuesday before the EU Parliament, would suggest preparing the ground for a rate cut maybe next month or maybe in December. Any other questions or any other charts that you would like to look at? Because I'd actually love to look at EUR GBP right now. Remember that we did get that decision to expand the APF, and now we have this decision by the ECB to keep rates steady. Under those conditions, I would be thinking, can I get a further spike up in Euro Pound? Okay. So let us see. What are we getting in EUR GBP right now? Of course, we've exceeded average daily ranges. We are pushing into the daily EMAs. That's unfortunate. Whenever we find ourselves around daily EMAs, it's always difficult to get a follow-through rally, a follow-through sell-off. Those daily EMAs tend to provide another level of support or resistances. So much as I was interested in looking for another push on the upside, another excuse to buy, because I now see that prices are within the EMAs, I am not keen about jumping in. I am not keen about joining the buy side of your Euro Pound from here. I would have liked this sell-off in Euro to get us a nice price in Euro Pound to buy from, but we're not in a position to take action. Outlook on GU. Okay, let me shift charts. Well, guys, what does quantitative easing do? Oh, sorry. Now I remember that post of gold earlier about QE. Let me explain that first. Fed style QE make dollar weaken, unlike BOE QE. Gold, quantitative easing, whether it's the Fed or it's the BOE or the BOJ or whoever's doing, quantitative easing will always lead to a weaker currency. The only place where QE did not lead to a very weak currency is in Japan. And we had other reasons on why the yen did not really weaken when the Japanese were actively doing QE. Okay, guys, we're running out of time here. So now that we have QE in the UK expanded, I'm looking for this break of 53.40 to lead to some significant sell-off. We have a strong support in our 1.5 level in GBP USD. I would look at it as our objective over the coming week to get to that 1.5 area. Remember that the break of 53.40, 53.27 is a break of the support which has held your GBP USD over the last year. So that was a very strong support area. Ages. Euro is a bear market for me, but the only place that I am willing to take a sell would be at least coming from 33.35 or 33.30, or you give me an hourly close below 32.79. The best thing that you can do now is to wait for the press conference. See if from the press conference Mr. Trichet reiterates that the bank's view on inflation is now broadly balanced. If he uses the term broadly balanced, that means that the ECB is planning to cut rates November or December. Okay, by saying that this inflation is broadly balanced, they're ignoring the rise in inflation because they want to communicate to the market that they are planning a rate cut very soon. So I'm bearish, but this is not the right place to take action from. Give me an hourly close below 32.79, and I will look for a test of 32.28. But from where we are, I'm not willing to pull the trigger. Of course, if you give me a longer term view, my focus is on the sell side. Alright guys, we've run out of time. Thanks for joining. Good luck with the press conference.